This is an introduction to a series of the most awakening videos. If you have been wondering what is the missing puzzle on your trading journey, this is it. I discovered that too much of everything is bad. Mark Twain puts it best: too much of anything is bad, but too much of good whiskey is barely enough. Even in trading, this quote is true. When we learn too much, it ends up creating a trader's block, just as theory is a waste of time without practical application. But there's a way to stop overlearning and start trading the right way. In this video, I'm going to show you how you can trade the right way. Make sure you watch till the end. One of the great challenges in this world is knowing enough about a subject to think you're right, but not enough about the subject to know you're wrong. I was also in the learning rabbit hole. I used to learn everything I came across on YouTube, especially when it's a new concept. Then I mixed everything I learned and tried to apply everything I've learned every time I trade. And I lost a lot of money in the process. So to become a master in trading, you must become a master of the basics. Do you remember supply and demand? Supply and demand is the basics of any profitable strategy. Supply and demand is what moves every market. Stocks, bonds, forex, metals, synthetics, indices, everything. Most of the YouTube gurus flip and decorate the supply and demand concept. We used to trade the head and shoulders pattern. Today the same pattern is called a change of character or a flip pattern. Like the Bible told us, there's nothing new under the sun. That new strategy you are trying to learn is the same old concept with new names. The same way supply and demand zones are called order blocks today. So if you go back and relearn how the market moves, learn market structure, supply and demand, and your entry patterns, you will become profitable. Because market structure is the behavior or condition of the current flow of the market. It highlights support and resistance levels and swing points. People forgot to utilize their swings because they were told that they will become liquidity, and the market maker is looking for their stops. Smart traders use supply and demand to pinpoint areas where they might buy or sell. In other words, supply and demand act as a filter, helping traders to identify potential profitable price levels. So patterns, which include breaker block as well as order blocks and fair value gaps, provides entries, stops and profit targets in a pattern that can be easily seen. So let's dive into the meat of the video. To all beginners and non-profitable traders, there's no need to reinvent the wheel. If a trading strategy is working, there's no need to add other strategies to it. Just use the strategy as is. Follow a trading plan, because if you don't have a plan, you don't have an edge. For example, if you take 10 trades and you're using a 1:3 risk to reward ratio and you win 5 and you lose 5, this will be your outcome. Per trade, you get 3 times your risk when you profit, and you only lose the same amount you risk per trade when you lose. The trick is to look for the same trade and fix it with the risk to reward. Then journal the trade so you can see some variations of the same thing. This is what I look for on a chart. I look for a clean break of a high which will create my zone. Then I wait for a retracement to the zone. After, I look for an entry pattern on the smaller time frames, then enter when the pattern forms. Go back to the parent time frame to manage and exit when it reaches my target. For a bearish example, I look for a clean break of a low, then highlight my zone and wait for a retracement to the zone. Then look for a candlestick structure or a flip pattern on the smaller time frames. That's it. As I have told you guys, we will have variations of the same thing. Sometimes price can break a high, then consolidate for a long time before it returns to the range. We have different varieties of the same thing. The most crucial part here is to know how to identify your highs and lows. Most traders will be chasing their retracement or consolidation, but we wait for a specific point. Like Dave says, no zone, no trade. If it's not a trade inside a zone and you did not execute on a candlestick pattern or a flip pattern, that trade is a shit trade. It's like hurting yourself and blaming others. So let's stop overlearning things and start practicing. It's like watching tutorials on something and not following along. When the opportunity comes to create the thing, you reopen the tutorial. Same here. People watch videos on how to trade, but they don't backtest and follow their trading plan. When the time to trade comes, they hesitate and rewatch their trading videos. We learn by doing, not watching. The term watch and learn actually means watch and see how it's done, then do it yourself. This is just an introduction to a series of the most awakening videos. If you like this video, please subscribe, like, share, comment below. Share your thoughts. There will be a Telegram link below where we can share our thoughts and share maybe our analysis as a family. So subscribe to see the upcoming videos.